Bitcoin's decentralization, it kind of exists on tens of thousands of computers around the internet. There's no central point of failure where you can just go to a company and say, turn this off. Bitcoin can't just be turned off. It's a real problem that people think of inflation as the consequence rather than the cause. Inflation really is increase in the money supply. What is money? Money, I like to describe money as the foundation for all trade and savings. What does an economy look like if you don't have money? That's I think a illustrative question to ask. If you don't have money in an economy, you have a barter economy, which means that people have to trade with each other directly using whatever goods that they've produced. So if you're a fisherman and you want apples, you have to go to the apple grower and say, here, do you want some fish?
In 2017, Vijay Boyapati wrote a long-form article titled The Bullish Case for Bitcoin. At the time, Bitcoin was around $1,000 per Bitcoin, and his intent for the article was to hopefully help explain the economic importance of Bitcoin to his friends and perhaps even some Wall Street investors. The article was a smash hit and has since gone on to be read by millions of people globally. His article explains Bitcoin in a simple, easy, digestible manner in a short read, and it's perhaps the best thing I've read on Bitcoin. In 2021, Vijay published and released his book by the same title, The Bullish Case for Bitcoin, with the foreword written by Michael Saylor. In today's episode, Vijay explains a brief history of money, the attributes of a good store of value, the common misconceptions about Bitcoin, and the inherent risks to Bitcoin. So with that said, let's dive in with the one and only Vijay Boyapati. Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Vijay, welcome to the show.
Thanks, Jay. It's great to speak with you.
You too. So before we get started, the first thing I ask everybody who comes on the show is tell me 5 people professionally in your life that you are surrounding yourself the most with these days. This is what I consider, the average of, you are the average of the 5 people you surround yourself with. So I'd love to know who Vijay Boyapati is surrounding himself with these days.
Oh, that's really interesting. So, I'm a father of 3 kids, and we have another on the way. So this is not professional. Because of COVID and, being, semi lockdown, I spent a lot of time with my kids. My wife, my wife's probably the smartest person I know. She's a PhD from MIT in bioengineering. So she has a big influence on me, and, she comments on my thinking and on my books and sometimes on Twitter. So she's a big influence on me. I have also some friends that I picked up from my Google days. I worked at Google a long time ago, and I feel like I got incredibly lucky with the group of friends that I met when I was at Google. We were all just basically out of college, but somehow the people that I met in those early days all went on to become incredibly successful entrepreneurs and managers at some of the biggest tech companies. So I'm not sure I want to drop their names. I don't know if I haven't asked them, whether they want to hear their names in public, but, people from those early days, I'd say have been pretty influential on me. And that's how I actually got into Bitcoin as well. One of those friends was my introduction. I'm not sure if that's a lot of my world right now, because of, the pandemic. I feel like our world is so compressed, and when I think about that question, I really think about I'm in my house most of the time. I'm with my kids most of the time.
Yeah, me too.
So that's the big influence on my life that comes to my head straight away.
So let's rewind the tape. Why don't you tell us, where are you from? Where did you grow up? I know you're not from the US, so tell us a little bit about that and how that may have influenced, who you've become and the way you think.
Yeah, so I was born and raised in Australia. I grew up as an Australian in the 80s. So I loved all the things that an Aussie loves: cricket, rugby league, meat pies, all of that kind of stuff. I grew up just like a typical Australian kid. As the son of Indian immigrants from India, and my dad came to Australia to do a PhD in engineering, and he actually came to Australia just a few years after they repealed the White Australia policy. So it was a very, country where there was still a lot of racism, and I had the experience of like the young brown kid growing up in that environment, which is, I think, um, is a very important lesson for me about growing up and having thick skin and feeling self-worth and not, being too upset about what other people think about me. Anyway, so I went through school, got my undergraduate degree in computer science at the Australian National University, and then I came to the US to do a PhD in computer science, and I didn't end up pursuing the PhD. I took a job offer and ended up at a small company, a startup called Google. It's not a startup anymore. It's one of the biggest companies on earth.
What employee number were you at Google?
It was in the low hundreds. I can't remember exactly what it was. Low hundreds. Yeah, I joined a couple years before the
Yeah,
IPO.
that was '04, right? Yeah.
The IPO was '04, and I joined in early '02.
Yeah, I remember that because I was an internet entrepreneur and I was monetizing. Some of my monetization was coming from Google, and a bunch of my friends that were also publishers were taking their money, that their checks from Google, and they were taking half of, a lot of them were taking half of it and buying Google stock with it. And I was like, we're crazy. Wow, was I stupid?
There was a lot of skepticism at the time about Google as a business, and I distinctly remember during the IPO, the media had such a strong negative perspective about Google's prospects. Yeah, and oh, how can this new internet company, be worth as much as Ford Motors? That's
Yeah.
ridiculous. With a $20 billion valuation, of course, Google's now worth $2 trillion.
Yep.
I mean, it's 100x from where it was
Yeah.
at the IPO. But that was a good lesson for me. It's a good lesson that
Me too.
the media is very, very biased, tendentious. They want to create a perspective rather than trying to understand something like Google. And they don't understand technology. And actually, a lot of famous investors, I think, don't really understand technology. Warren Buffett had the opportunity to invest.
They don't understand exponential growth. I mean, Buffett clearly does, right? But like most of them don't understand compounding and exponential growth. Most of Wall Streeters, I had a bunch of angel investors in my tech company that were Wall Streeters. Smart guys, but I don't view them as investors. I view them as traders. They literally have no conviction in anything.
Yeah. Yeah, Buffett's interesting because he had the opportunity to invest in Google and Amazon and a bunch of tech companies, and he never did. And I think he's an expert at the sort of the value investing mindset, looking at cash flow, discounting cash flow into the future and seeing if something's undervalued based on its current cash flow. But he doesn't really understand hypergrowth. He doesn't understand something that's not producing cash flow, but say 20 years from now, it could produce cash flow. And that's certainly what Google and Amazon are doing. But in the early days, they were in hypergrowth mode, which is we want to capture as much of this market, which is a gigantic market, as quickly as possible. So we will burn cash
That's
in the
right.
short term to capture value in the long term. So that's also another lesson for me, to be skeptical of people who are not necessarily experts in a domain that they care to have a strong opinion on. For whatever reason, they're asked their opinion on something that they don't really know or understand. And then people will say, well, Warren Buffett said that Bitcoin is, rat poison, or however he described it. But he hasn't really put in enough time to understand its importance.
100%. And the one thing that I was saying about the exponential growth is network externality and network effects, which we'll talk about with Bitcoin, because I think it's a monetary network. The money itself are the participants versus the number of users in terms of the strength of the network. But we can get to that. But that's what they miss, right? What they'll say, and I still hear about companies today that are going public that are tech companies, friends of mine will kind of echo and parrot the things that they hear the Buffetts of the world saying, well, it's got no profits. And I'm like, No, they're buying network effect, and that becomes a perpetual thing once they get there, right? Like, it doesn't die. If it does, it's a slow death, right? It's so, and this is people, it escapes their thinking. They don't understand.
For any product or service that has a network effect, the network effect is the most important feature that it has. You think about Microsoft Windows or Facebook. You could, think about the free stuff that Microsoft Windows gave. None of that was important. What mattered was the network effect. Windows wasn't the best operating system. There were better
right.
operating systems, but it had the most powerful network effect. If you're a developer, you want to go where all the people running operating systems are to build software. And if you're looking to buy an operating system, you want to go where all the developers are. So
Yes.
there's this very strong feedback loop.
Yeah.
And it didn't matter that that's what people kind of miss when they criticize something like Windows, and they say, well, Microsoft is cheating or doing something, unfair, because it's clearly not the best operating system, but it has the dominant position. How's that possible? Well, it's because it has the network effect,
Yeah.
and they developed that network effect very early. So that's we're talking about lessons that we've had during our careers, or at least me. That's another one, is the importance of network effects, and it's certainly something that I saw and tried to understand with Bitcoin. Does it have a network effect? How powerful is it? Is this going to help it become what I think it will become eventually, which is global money?
And it's so early because the network of Bitcoin, while the number of participants, nobody really knows, but they say 100 million, 200 million. Nobody really knows the number of individual people because we just see addresses, obviously. But to me, it's like maybe 50 basis points to 1% of its future market value. In that terms of like 100 to 200 trillion dollars, just say. I mean, I have some friends that think it's going to be more than that, inflation adjusted even. And I'm like, wow, that means there's a lot of store value in assets that beyond my even understanding of what there might be, but they could be right. Who knows? But it just shows that it's so early. And then the question is, do we have true network effect at that point? Well, relative to everything else that's out there so far, yeah. The question is, can something else, I don't want to jump too far ahead because I have questions here that I want to get to in a certain order, but so we're getting a little off here. Let me just take a step back, right? You were early to Bitcoin, but you were also early in tech at Google, to your point, right? You came in at 2002. I assume you did okay on stock options. Like you, I also made money in tech, and like you, also in my early 30s. And the time I did that was around the Great Recession, right? So interest rates were at like 0%. So you're sitting on this pile of cash, and you start to quickly realize, if you're sitting there for like a year or so, with most of it, the first year or so, I was sitting on a lot of cash in my early 30s. And I'm watching like real estate prices in Florida and stuff move pretty quickly, and I'm like, it'll crash. But it was like 2010 or 11. And I'm like, well, when is it going to crash? Because we just had a crash. Usually it takes about 8 years, right? So it was a kind of weird thing. And I was like, this is maybe because the interest rates are a little low, but then they'll raise interest rates, right? 2015, they start raising interest rates, right? And there's these rate hikes. They're slowly doing it for 3 years, right? When it hit me that we have a real problem was December 2018. I said, wait a second. The market just dictated to the Fed what to do with the monetary policy. This is weird, right? That's when and a lot of people figured it out way earlier than me, but that was my aha moment for not just Bitcoin, but like, we have a problem. Like, hold on, guys, there's a problem here, right? And so I'm just curious, was that part of how you came to Bitcoin? Because for me, that was definitely when I knew about Bitcoin, but I didn't understand Bitcoin. And I really started to dive in when I started to see that there's a real problem with interest rates, and they're forcing us. There's no longer a risk-free instrument to just save your capital in. Everything is where you save your capital, which is real estate, stocks, commodities, et cetera. I was like, this is crazy. And it scared the crap out of me. Did you feel that at all?
So I came to Bitcoin through, I'd say before I got to Bitcoin, I should say that I was interested in gold. And I had a background in Austrian economics, and I had spent a number of years while I was at Google kind of doing a self-study of economics, trying to, understand how economics can help me understand the world. And so I was particularly interested in the history of money and the economics of money, and the question of, why does gold have any value at all? It's a useless rock. This was a question that I
Yeah.
had been obsessing over for at least 2 or 3 years before I found out anything about Bitcoin. And why is it considered a protection against inflation? The Fed had been running a very inflationary policy in the early 2000s, which precipitated the housing crisis and the massive crash that happened. So I was thinking about those questions, um, and it was 2011 that I was first introduced to Bitcoin. I had a bet actually with a friend of mine who was one of the people who's a big influence on me. We talked about that earlier on, and the bet was about the Federal Reserve policy and whether the Fed was going to raise interest rates or hold them at zero. It was, I think, zero at the time.
Mm-hmm.
And I won the bet, and the bet was
Unfortunately.
for yeah, the bet was for a single silver coin, a 1 ounce silver eagle, which was worth about $50 at the time. And my friend said, "Well, don't take the silver coin. There's this other thing that I think is really cool that you should check out. It's called Bitcoin. So let me pay you in
Wow.
Bitcoins." And I had no idea what he was talking about. This was 2011 when Bitcoin wasn't really widely known. And I said, okay, sure, because my friend is probably the best investor I know, incredibly successful at picking things early and seeing the potential of things that develop, years down the line. So I downloaded the software. He told me to download the core software. It started downloading the blockchain. I didn't know what was going on with my laptop. The fan started spinning. The laptop was getting really hot. Felt like my laptop was dying, actually.
CPU usage is at 90%.
Yeah, exactly. Pegged at 90% for like 3 hours or whatever it was. And then my friend showed me how to create an address, and then he sent me 5 Bitcoins. Um, and he showed me on a block explorer that I had received them, and I didn't know. None of it made sense. It was just a string of numbers and
Mm-hmm.
letters. But that was what introduced me to Bitcoin, and I quickly recognized that Bitcoin was a monetary phenomenon. It's this new technology. I didn't quite understand what it was, but I knew it was like some kind of new money. And so all of that thinking I'd done regarding gold switched over to Bitcoin. And I thought this is an even more fascinating question than why is gold valuable, because this defies the kind of common wisdom of most economists, including Austrian economists, that a new form of money can be created out of thin air, and in the case of Bitcoin, by someone that nobody even knows. Um, so that there's no inherent sense of trust. Like, why would you trust Satoshi Nakamoto? You don't know who he is, and it has value. It has value on the market, and not only does it have value on the market, but its value is increasing. And I actually think this is the most important economic question of this century. How is this possible? And it screams for an explanation. And so from that moment, I became really obsessed with trying to figure it out for myself, just out of my own curiosity and interest in economics. And I've been thinking about it since 2011. And we talked a little bit about my article before we started. That's what really got me into wanting to write the article, because I had a lot of people who had the same question, like, what is this? Why does it have value? Um, and I think most people, when they first come to Bitcoin, they don't have an economic framework to think about why it's valuable. They've heard these
Mm-hmm.
narratives that are sort of floating around in newspapers or in the media, that it's a scam, or that it's the tulip mania, or there are all sorts of there are all sorts of things out there, and most people don't look into these questions very deeply.
Yeah.
So yeah, I had a lot of people asking me, and all of that sort of thinking that I'd done over the years culminated into me writing an article about why Bitcoin is valuable.
Before we dive into Bitcoin, and I have a very pointed questions that I told you before the interview started, and how I want to do the flow of this, because I think your book is amazing, and the article as well, which I've sent the article to a lot of people, just the flow of how you walk people through the history of everything, right? So it just, the questions are going to pop up as they're reading these, and then you basically ask the question and then answer it. It's the same questions that they're going to have in their head, right? So it was really good. What is inflation, right? Because I mean, I know what inflation is, but a lot of people, they look at it like, it's not a problem. It's expected, right? We have inflation. That's no big deal, right? Like this is what it is. But like, why do we have inflation, right? And tell the audience why it's important to understand what inflation is, why it's important to understand it. And we obviously know that the answer to that currently could be that you buy some Bitcoin as a hedge against inflation. But why don't you explain it to everybody?
Yeah, so most people generally understand inflation to mean a rise in prices. So they go to the grocery store and things cost more than they used to cost. But this is actually one of the biggest confusions and most harmful confusions about economics, really, in general. And Ludwig von Mises mentioned this back in the 40s or 50s, that it's a real problem that people think of inflation as the consequence rather than the cause. And inflation really is the increase in the money supply. And why is there an increase in money supply? Well, the money supply is controlled by, around the world, central banks. And central banks have the discretion to increase or, in rare cases, decrease the money supply through their operations in the market. And the consequence of the Federal Reserve increasing money supply is eventually prices increase because there are more dollars around, so those dollars are worth less than they used to be. Uh, so if you imagine that someone was able to flip a switch and suddenly there was twice as many dollars, then on average everything would cost twice as much.
Exactly.
But the process doesn't happen uniformly. It's not like that everyone gets, you know, some amount of dollars in equal proportion with everyone else. What happens is the money supply is created at the central bank and it's distributed into the economy by people who get that new money supply first. And that's the banking system. And whoever gets the new money first benefits the most. And the people who get the newly created money last end up being harmed because prices have risen and the money that they've received no longer has as much purchasing power. So a pensioner or someone on social security um, is getting a fixed amount of money, but the value of that money is decreasing over time. The amount that they can purchase at the grocery store, at the gas station, is going down. So inflation is this really insidious hidden
It's a
tax on
tax.
most of the population. It's taking away their purchasing power, and it's doing it in an insidious way because people don't understand it. It's gradual. It's hidden. It doesn't seem like there's any direct cause for it happening. It's kind of it's different to direct taxation in the sense that when a government directly taxes people, they take money out of your pocket, and you can see in your paycheck they say we've taken this much money and you don't have it anymore. And the big difference is there's political pushback with taxation,
Yeah.
right? People see the money that's being taken and they object and they say, well, actually, I don't want you to increase tax rates because that I know that that harms me, and I can understand perhaps in general terms why it harms the economy, but they usually don't have that understanding with inflation, and that's why I think it's a particularly harmful way of taxing
Yep.
people, and it's a really unjust form of taxing people as well because it really benefits people who have the strongest connection to the system. And why should we?
Cantillon effect, right? Yeah.
Yeah, exactly. It's called the Cantillon effect. Why should we give privilege to bankers over pensioners? It just seems completely crazy.
100%. The next question I have, what is money? 3-part question. Is Bitcoin money? And what are the attributes of a good store of value?
Yeah, that's a big question.
The last part's definitely big.
Well, yeah, what is money? Money, I like to describe money as the foundation for all trade and savings. What does an economy look like if you don't have money? That's I think a illustrative question to ask. If you don't have money in an economy, you have a barter economy, which means that people have to trade with each other directly using whatever goods that they've produced. So if you're a fisherman and you want apples, you have to go to the apple grower and say, "Here, do you want some fish?" And it's an incredibly inefficient way to conduct trade. And societies that operated on barter had very, very small economies. Because it's typically limited to the people you trust, and
Or if they need what you have, right?
exactly right. There's a problem called the double coincidence of wants problem, which is exactly what you described. If the person that you want to trade with doesn't want what you want, then you're basically hosed. You can't do anything. So what happens is over time, historically, people looked for something that was more tradable because they wanted to conduct trade more. It's good beneficial to both parties to trade. So if you want some apples, what you do is you look for something that the apple grower wants. And oh, it happens to be that they want seashells. So you start collecting seashells while you're trading with other people because you realize that they're more tradable than fish. So you keep your savings in seashells. And over time, what happens is one good emerges that becomes money. And it becomes the thing that we use to trade and the thing that we use to save in. So that's what money is. It's what we need it for trade and savings. If we don't have it, we live in a very primitive economy that, is very limited in trade, basically impoverished. If you look at any barter societies, they're lacking all the elements that we would recognize civilization to have. So getting back to money, money serves various purposes in an economy. And most people today think about money as one of the functions of money. And I think this is another big confusion that comes from economics that's, pretty harmful, because money serves three main functions in an economy. Store of value, you want to keep your savings in it because you want to keep, your purchasing power through time into the future. Medium of exchange, you want to go to the grocery store and you want to be able to buy something, and you don't want to have to use your fish to go and buy apples, so you use it as a medium of exchange. And finally, it serves as a unit of account. That means it's the thing that everything is priced in terms of. So you go to the grocery store and you see prices in terms of dollars instead of baseball hats or baseball cards or something. Money is the thing that everything is priced in terms of. And it's also unit of account. Another way of thinking about unit of account, it's the thing that people calculate their profit and loss in. So if you're a business, you're calculating your profit and loss in terms of dollars. If you're in the US economy, you're not calculating it in terms of apples or fish or shoes or something else.
Right, or pounds or rupees, yeah.
Exactly. So one of the confusions is that people have sort of thought of money as just a medium of exchange. In fact, a lot of economists define money as the generally accepted medium of exchange. But that's kind of like defining a car as the steering wheel, as one of the components of the car. Medium of exchange is just one of the functions of money. And the reason this is important, and I like to explain this, is that money doesn't suddenly become a medium of exchange. It doesn't suddenly become a unit of account. It goes through an evolutionary process. It takes time to get those other functions, unit of account and medium of exchange. And if you look at gold as a historical example of money, the most successful money in history, gold was money for most of human civilization. Gold started off as just a kind of collectible, like a trinket, a shiny rock that primitive man saw on the ground and thought, well, this is interesting, I just want to hold some of it. So the first stage of any money is that it's valued as a collectible. It's just a whimsy of its possessor. It's something interesting that people want to hold for whatever reason. The next stage, as more and more people value it for that kind of collectible purpose, is it slowly but surely becomes established as a store of value. People begin to recognize this thing has had value in the past. It looks like it's going to have value in the future as well. So I want to keep some of my savings in this new good because I want to be able to keep some value into the future. Now, when enough people recognize an economic good as a store of value, it becomes suitable as a medium of exchange because you recognize, well, everyone else seems to value it. They're willing to take it. So now I can use it in exchange. I can take this store of value that I've been saving in, and I can use it to exchange something that I need right now, like a fishing net or something like that. Then finally, once it's widely used as a medium of exchange, people start pricing in terms of it. They start saying, okay, the price of this loaf of bread is 1/10 of an ounce of gold. And you start seeing prices everywhere in the economy in terms of that monetary good. So that's really the evolution of money. It doesn't sort of immediately become a medium of exchange. This is one of the criticisms, to get back to Bitcoin a little bit, this is one of the criticisms I think is really badly mistaken about Bitcoin, that, oh, it's failed, it's not money because it's not a medium of exchange. What people haven't understood is that Bitcoin is going through the same evolution that gold has gone through. It's just incredibly compressed because Bitcoin's a digital good. We live in information society where information travels at the speed of light. And this process that took gold many, many thousands of years to go from a collectible that someone picked up on the ground to being the global unit of account, which it was in the 19th century, that took 5, 10,000 years. That's happening in a matter of decades with Bitcoin. So that same process is happening very, very quickly. But it's wrong to say that Bitcoin should be a medium of exchange, or because it's not a medium of exchange, it's failed or it can't be money. That's putting the cart before the horse. We have to wait for Bitcoin to go through the process of becoming a store of value, and then it will be suitable as a medium of exchange.
So in your book, you talk about as you describe it, is the attributes of a good store of value, because we're at that phase, we're at that stage right now in the evolutionary process, which is the store of value stage. And you have a great chart, we'll put it up in the interview, where you compare Bitcoin, gold, and fiat, and you go through all the different attributes, which are durable, portable, fungible, verifiable, divisible, scarcity, established history, which is the one thing that we obviously just need more time on, and then censorship resistance. If you could just walk people through, I don't know how quickly we could do this, but if you could walk people through what that means for each one of those attributes, that would be awesome.
Yeah, I'll go through the ones that I think are most important.
Yeah.
And these attributes have been known for a very long time. Aristotle actually wrote about these attributes over 2,000 years ago. So human societies over time have selected various forms of money, and these forms of money have competed against each other as different societies began to trade with each other. Some societies use seashells, some societies use cows, some societies use gold. And as these monies competed with each other, it was these attributes that really people valued them based on, to be a good store of value. So portability, let's talk about portability. Gold is superior to cows as money because it's much easier to move gold around than it is to move cows around. Durability, you want something that will last into the future and won't perish. So gold is superior to wheat. Fungibility is an important one, that every unit of the economic good is equivalent to every other unit. So gold is superior to diamonds because diamonds are irregular in shape and quality. So if you're conducting trade with diamonds, every time you receive diamonds, you have to get your magnifying glass out and look at it and see if it was fake and like what the quality was, and it would make trade much more difficult. Whereas gold is fungible. Every unit of gold, when you melt it down, is exactly the same as every other unit. Verifiable, that's an important one, that you should be able to easily and quickly recognize this for what it is. If it's something that is very hard to verify, then it slows down trade again. Gold is fairly easy to verify. You can weigh it. It's one of the densest elements. It is actually, this is one area where Bitcoin is much superior to gold. We can talk about that later, but unfortunately, there's a lot of gold-plated tungsten out in the market where people are trying to fool other people with fake gold. But probably the most important attribute of all of the attributes is scarcity. And the reason it's the most important attribute is you want to keep your savings in something that's hard to produce. If sand were money, for instance, and we had our savings in sand, you would just go down to the beach, you get a shovel, and you get a bunch of buckets of sand, and you call yourself rich. And everyone else who had sand would then be, commensurately poorer because of that.
Sounds like fiat.
Yeah, exactly. It is. It is. But gold is very difficult to produce, and because of that, human societies recognize that it was a good thing to keep your savings in, because no one could produce it very easily, and it had that property of scarcity. So one thing I do in my book is I grade fiat money, like dollars and yen and pounds and the euro and gold and Bitcoin against each other along these attributes.
Yeah, I'm looking at it right now.
Yeah, and explain why I think Bitcoin is superior along most of these attributes. Gold does have one advantage over Bitcoin, which is established history.
Yep.
Gold has a long and storied history. It was used as money for most of human history. So it does have that advantage. But one of the things about established history is that people's trust in a new technology or new economic good sort of asymptotically approaches its maximum. So what I'm trying to say is that it goes up very, very quickly. And I like to think of the internet when I think about this. If you look at the internet in the first 10 years of its existence, by the early 2000s, most people were like, oh, this is interesting, maybe it's important. But they weren't really sure if it was permanent or if it was going to be a big deal. But you fast forward another 10 years to 2010, I think it was clear to everyone, almost everyone on Earth, that the internet was a transformative technology. It was changing every industry, and it was a permanent institution in the world. It wasn't going away. And I think the same thing will be true of Bitcoin. There's this 20-year time horizon. Bitcoin's only existed for a decade, but I think if you fast forward a decade from now, you will have a generation of people who've grown up and who have started to earn money, for whom Bitcoin has existed their whole life. And because of that, they will think of Bitcoin as a permanent institution in the world. Their level of trust in Bitcoin will be very close to the general sort of level of trust that gold is a permanent institution in the world.
Yeah.
So I think over the next 10 years, it's going to be a very steep increase in people's level of trust in Bitcoin as something that's not going away, that is incredibly important, that is going to transform the world in various ways. So yeah, Bitcoin is superior along all the other attributes, I think, and it will catch up very quickly on established history.
Agreed, 100%. You gave him an A+ for gold on established history. 5,000 years is hard to argue. Bitcoin, to your point, because it's technology and it's rapidly spreading virally through the internet, it will rapidly grow. You have it at a D. I would give it a C.
What was this on established history?
Yeah. Just because, like, you know, maybe you wrote this maybe like a year or 2 years ago, whenever you did the book, you know. So
yeah.
But that, like, a year is like 10 years, maybe more in normal history, I think, you know, to your point. For durability, though, you gave an A+ to gold and a B to Bitcoin. Explain that to me.
Yeah, so gold has existed for most of civilized history. Gold has always existed, but it's been valuable for most of civilized history. The gold that was mined by the pharaohs or by the Romans is still extant and used today. Actually, probably the electronics in your phone have some amount of Roman gold in them. So gold certainly is the king of durability. Nothing has shown that kind of length of durability like gold has. When you think about the durability of Bitcoin, you really have to think about the durability of the network. And this kind of ties into established history a little bit. The two things are kind of mingled with each other. Mm-hmm. And Bitcoin's durability comes down to whether you believe the network will persist into the future. And I think it will. I think there's very good signs that despite Bitcoin being attacked by various governments and even by some corporations, it's continued to exist and has shown like a remarkable degree of anti-fragility. So that gives me confidence that Bitcoin will be durable, but it really hasn't had that long history that gold has had. So yeah, it's still it's an open question about how durable it will be, and I expect that its durability will be proved as we move into the future.
Okay, got to ask you this question. I mean, you're the guy who gives the bullish case for Bitcoin, so I got to ask you this question. Can you orange pill somebody on Bitcoin in one sentence?
I think the twin pillars of Bitcoin's value proposition are that you can keep your savings and transmit your savings without anyone's permission. That's not something that's existed before, and that you can keep your savings free of debasement. Those are Bitcoin's twin value propositions, and I think those are valuable to almost everyone, to be able to keep your savings safe, the fruit of your labor safe into the future and anywhere you want to take it in space. I think that's what I would say, that those two attributes make Bitcoin unique and special and worth owning.
So that's the elevator pitch. Okay. And I guess, I try to tell people about Bitcoin. I feel like I can't do it in a sentence, in a meeting. It's like It's like the rule of 7 in marketing, right? It just takes like a bunch of touches over time to really understand Bitcoin. And it's a shame because I think a lot of people don't have the patience for that, you know?
Yeah, I guess you could summarize what I said by saying Bitcoin is the greatest form of money that humanity has ever known. And if that piqued their interest, then you could explain why.
Yeah.
But I think most people don't think about money that much. Maybe if you live in a country which has had an economic collapse because of bad monetary policy, you're more aware of this. But in Western countries, people just take money for granted and they never dig into why it's important, why it would be good to have a better form of money than we currently have. Um, so it is sometimes difficult to pick the interest of a person who's living in the United States. But that's why Bitcoin has this great feature which attracts a lot of people, which is number go up. Its price keeps going up because its adoption keeps growing, and it has absolute scarcity, which has never been seen before in any economic good. That you can't create more of it. There will never be more than 21 million Bitcoin.
That's the key to me, VJ, because the people will say like, well, what's the difference in this and Beanie Babies? And I'm like, are you kidding me? Like, come on, guys. Pokemon cards, they'll say.
Yeah.
And I'm like, what? No, it's not about a trade. Like they're thinking it, they're pricing it in dollars when they say that, because they're thinking it's at this price and then the dollar price will go up. They're not thinking of it as a store of value over time that one Bitcoin is one Bitcoin, right? Like this is not something that a newbie coming into this will understand because it's denominated in dollars.
Yeah, exactly. And people denominate things in dollars because it's the unit of account. It's the mental tool that they use is to think about everything in terms of dollars, and it's hard for them to imagine. It's like that feeling when when you travel overseas and you go to a new country and they have a different currency that has a strange conversion rate against the dollar, like the yen, for instance. A lot of people find it hard to reason about whether something is cheap or expensive when they go to another country because they have to do the mental calculation back into dollars. It's such a strong formed habit. But that can change over time. I mean, there are certainly many economies and many societies that had one form of money completely collapsed and people had to begin thinking in terms of another form of money. It's just some people are better at anticipating that and recognizing that maybe a new form of money is coming. So maybe I should switch my mental model a little bit. And those people are the ones who benefit the most. Whenever a new good is being monetized, it's always good to be earliest. And it's always bad to be latest in line with a good that's being demonetized. Like if you look in the 19th century, silver was demonetized. And there were a lot of people who were hardcore silver bugs who didn't want silver to be demonetized, and they had a lot of savings in silver. But when silver was demonetized, they lost a lot of their savings because of that. So the same thing could happen to people who have dollars or who have pesos or rupees or whatever currency it is. If their currency is demonetized, their savings are then worthless. And that can happen quickly or it can happen slowly. In Western countries, it's happening slowly, but there's certainly nothing that prevents it happening quickly or, a hyperinflationary event happening in Western countries either.
You mentioned your origin story to Bitcoin with your friend at Google. Did you think it was a Ponzi scheme or scam or anything like that when you first learned about Bitcoin initially? When you first heard about it, I should say?
I don't think I ever thought of it as a Ponzi scheme because I'm a computer scientist and I recognize that this is open source software. It's completely open. There's no like hidden deception there. Like if you want to figure out how Bitcoin works, you can actually go and look at the code and understand how it works. I was very curious about why someone couldn't just create a copy of it.
Right.
Like why can't I just create VJ coin or some other coin? And then Bitcoin has less value. So I really
you were
had
worried
to
about a
wrap my head
substitute.
around
Yeah.
a substitute. So I was really skeptical of the scarcity aspect. Like, does this 21 million limit mean anything if I can just go create a copycat of Bitcoin? Well, that's really when I started thinking about network effects and the importance of network effects, and that Bitcoin has the dominant network effect in this digital currency space. And you can't just copy the network effect. Like I can create VJ Book or you could create JBook to compete with Facebook, and we could even have all the features of Facebook. It doesn't mean anyone's going to use it, right?
No.
It doesn't matter. Facebook has the dominant network effect, and that is the most powerful feature that it has. And Bitcoin has that. It has the dominant network effect. Actually, if you look not in the space of digital currencies, but in the space of money, the dollar has the dominant
Yes.
network effect, and gold has a pretty strong network effect as well. The only reason that Bitcoin can take market share away from the dollar or from gold, despite the fact that they have this powerful network effect, is that it is so far superior. So we talked a little bit about Microsoft Windows. When Microsoft Windows had the dominant network effect in the 90s, there were better operating systems.
Yeah.
But you can't just be a little bit better. You have to be orders of magnitude better to start taking away market share from something that has a network effect. And that's what Bitcoin has. If you look at the attributes that make for a good store of value, Bitcoin is orders of magnitude better than the competition. It is orders of magnitude better than fiat money for scarcity. It is orders of magnitude better than gold for portability. Um, so despite the fact that these bigger forms of money in terms of market capitalization have their own network effects, Bitcoin is able to steal from them because it is so much superior. But other digital currencies, when you look at the relative benefit or whatever features they claim to have versus Bitcoin, the difference is so small that it's negligible, and they are not able to take a meaningful market capitalization or that number one spot away from Bitcoin, because you have to really be so far superior. And the big innovation was Satoshi's solution to this problem in computer science, which made Bitcoin possible. All of these other coins are just copying that and adding a few bells and whistles. That's just not enough. It's not enough to overtake Bitcoin. And so I think Bitcoin will continue to have that dominant network effect, and it will continue to take away market share from the bigger forms of money that historically have had their own network effect.
I agree. And, it's interesting because I have a bunch of friends that have introduced me to other coins, right? These altcoins, as they call them, shit coins, right? And I've talked to founders of these coins. I don't want to name names, right? But I've talked to some of the founders of these things. And I always ask them, why does the world need your coin? That's my question. Because I have a little investment thesis, pretty simple. DSD, differentiation, Bitcoin was different, right? You have to get to scale, right? They've clearly gotten to scale. And then it must be defensible. And what they're missing is that the network effect, the feedback loop, is the defensibility. And how do you overcome that? And this is where, I'm friends with Anthony Scaramucci, and he raised a couple $100 million at Skybridge to buy the underlying asset of Bitcoin in a fund a year ago. And it's over $1 billion in value today. It's grown substantially, right? And at the end of the day, if you're going to go to the Skybridge LPs, right, and come up with some new coin, whatever, like the Vijay coin, whatever it is, right? Do you really want to be in a coin that has a market cap of 50 million or 100 million or 200 million when there's $1 trillion asset over here? And that protects your money, right? It's safety for you to be where the money is. It's almost like all the other stores of value, right? Do we really believe that a 300 PE ratio for Tesla makes any sense? I certainly don't. Do we believe in any of these PE ratios? No, because you're there because everybody else is there. The problem with those as a store of value is that they can create more shares and dilute you, and there's all kinds of other issues, individual stock risk, lawsuits, who knows, right? This doesn't have that risk, right? This goes back to your durability kind of argument, I think, too, as well, and the established history, which is intertwined over time. But I really think that there's a flurry of all this, and the reality of all these altcoins coming out there, the only thing they're really solving for is trying to create wealth for themselves. They're not really trying to solve for a store of value. That's not what it is. They'll make arguments around it's environmentally friendly because our coin doesn't require the kind of energy. We'll get into these FUD things in a minute, but they'll talk about electricity costs and we're more efficient. But the money doesn't care about that. Let's be honest, right? The Wall Street money, the institutional money that'll be coming into this, they can't go into these newer asset classes. So as Bitcoin's numbers are going up, that's where they have to go, right? Regardless of what you say, the money will go there. The money feels protected by all the other money that's in it, because if you're like Carl Icahn, as an example, right? It's worth, like, say, $20 billion, right? 5% of his net worth is what, $1 billion? I'm not putting $1 billion in some altcoin that has $100 million valuation, right? I make the price, the thing's gonna go flying up, right? And I'm the one that did that. I'm the sucker. He's gonna put it in the $1 trillion asset class, right? It's the most protected asset class. Do you agree with that?
Yeah, absolutely. I mean, the liquidity is one thing. when you look at large pools of capital, exactly as you say, they're not going to invest in any of these altcoins, which are incredibly illiquid. The other property I think is really distinguishes Bitcoin from the competition is its decentralization. It's the only currency where it is truly decentralized. There isn't any central point of control. There isn't some group that really controls it and owns like a big chunk of the supply. And the importance of the decentralization is that it really gives credibility to the monetary policy. If you didn't have decentralization, if a coin was controlled by a small group of people, or even a somewhat larger group of people, like with Ethereum, you can't trust the monetary policy. And the monetary policy is ultimately what gives you faith that the 21 million supply cap is a real supply cap. When I look at something like Ethereum, which is the second biggest coin, they recently changed their monetary policy. And they argued that it was beneficial because it made it more deflationary and more like Bitcoin. But what they don't understand is that they completely destroy the credibility of their monetary policy. Now it's open for anyone to see that they can change it whenever they want.
Exactly.
Maybe now they think deflation is good, but in the future they could think that deflation is bad. Maybe they start thinking that Keynesian economics is the correct school of economics and we need inflation. So they could change that monetary policy. So it's not something that I want to keep my savings in because I don't trust in the long term in the fact that they say they have a supply cap. Whereas with Bitcoin, I really do have that trust because Bitcoin has faced the test of being attacked, not only by nation states, but some of the most powerful corporations in Bitcoin tried to change Bitcoin in 2017. They wanted to change one of the parameters of Bitcoin called the block size, and they failed. And if the most powerful corporations in the space all got together and they weren't able to change one of these attributes, I believe that they won't, or anyone will be able to change the inflation schedule. So that's what I think makes Bitcoin truly unique in this space, is that it has credibility because of its decentralization.
Like I said, I had a bunch of investors in my old company that were Wall Street guys, managing billions of dollars on Wall Street. And over the last decade or so, they've been telling me that we are in an everything bubble or a debt bubble. Depends on how you want to characterize it, right? And that someday, like all bubbles, we are going to see a crash, and they call it, the next crash will be the Great Reset, right? Is Bitcoin just a bubble? Are we in a bubble? Is everything in a bubble? Is there a risk to a crash at some point and decimating, and maybe Bitcoin just goes away? Because I know these are stupid questions, I hate to say, but these are my friends asking these questions, and really smart people otherwise have made a lot of money. And they just see it as this bubble, right? Like the tulip mania or something like that.
Yeah, the criticism that Bitcoin is a bubble is, I think, actually unintentionally apt. All money is a bubble. All monetary goods in history have been bubbles. And what I mean by that is they have a monetary premium. That is, the value, their purchasing power of all forms of money is much higher than their utility would justify. So gold is useless. You can't really do anything with gold. I mean, now today it's used a little bit in electronics, but most gold actually just sits idle in bank vaults. But historically, before we had electronics, gold wasn't useful for anything. Seashells aren't really useful for anything. They're useful for the purpose of money, for the functions that money plays in society. And so because of that, you have monetary goods whose value is way, way higher because they serve those purposes. So Bitcoin is a bubble because it has this big monetary premium. You can't eat Bitcoin. You can't dig a hole with Bitcoin. You can't drive Bitcoin. But it is so much superior at serving those functions of money that we need in society. We can't do without these functions of money. And so it deserves that monetary premium. And that monetary premium will continue to increase as more and more people recognize that it is superior for the attributes that make for a good form of money. So yes, Bitcoin is a bubble, but the funny thing about money is that it can be in a bubble, but it can still be undervalued if it's in the process of adoption for becoming money.
The other thing I get all the time is, oh my God, look at the price of Bitcoin. It's 60,000 or 50,000 these days, whatever. And then the one after this will be volatility, right? It goes up, it goes down, but the price is so high. Like, but look at this Ethereum; it's much cheaper. I should just buy that, or this new coin that's 10 cents. Like, maybe that'll be 60,000 someday, right? Like, this is the most common like unit bias thing, right? So, I want to dispel that myth as well.
Yeah, you mentioned it. There's a psychological proclivity that we have, and it's called unit bias, and it's the proclivity that we have to want to complete a task in to complete it completely. And this actually gives us the tendency, or a lot of people, the tendency to want to eat their entire plate of food, even if it's way too much, because we want to complete what we have in front of us, and that leads to overeating, as you know, one of the ailments that a lot of people have in America. So people see Bitcoin's price at $60,000, and they have this thought in their mind, well, if I'm going to buy a Bitcoin, I have to have at least one. A lot of people think, well, I can't afford one Bitcoin, so I don't want to have it. Whereas I can own one Litecoin, or I can own one XRP, or some other thing which only costs a few dollars. What they're missing is, when you're buying into Bitcoin, it's not the unit that matters, because the total supply is kind of arbitrarily chosen. Some altcoins have supplies of trillions. So, you know, that arbitrary choice of what the supply was gives each unit a much smaller price.
Yeah.
What you really need to consider is the market capitalization as a whole. And why does it have that market capitalization? It's because it's providing the services of a store of value better than anything else. So you want to have a fraction of it. You don't need to have like a whole Bitcoin. And actually, the fact that Bitcoin is the unit that people think about is arbitrary as well. The smallest unit of a Bitcoin is a Satoshi. Just like the dollar has cents, and there are 100 cents in a dollar, there are 100 million Satoshis in a Bitcoin. So you can buy, a handful of Satoshis for less than a penny. So if you think about it in those terms, you get rid of the unit bias. And it's a quirk of Bitcoin's history that one Bitcoin, which is 28 Satoshis, is the unit that people talk about. It could be just as easy to talk about Satoshis and how it's very, very cheap to get a Satoshi.
One of the challenges that I think we've evolved into was that we price it as a full Bitcoin, because when it started, that was really nothing. It was like a penny and 10 cents and a dollar, and it just slowed. But it's very similar to Berkshire Hathaway, right? So if you were to see the price of Berkshire Hathaway back in 1970, you would have never guessed it's like $500,000 today. If someone would have told you, if I would have told you in 1970, a price of, one share at say, let's say it was $100. I don't know what it was, right? I'm gonna say someday it's gonna be 500,000. Most people look at you and they're like, get out of here. There's no way, right? If I look at you today and I say, I think a Bitcoin's gonna be $5 or $10 million someday for one full Bitcoin, people are like, come on, they can't fathom it. But the difference, or the parallel here, right, is that they have not diluted or done splits on the stock, right? So he maintains the same number of shares. This is why I think it's crazy that Charlie Munger and Warren Buffett don't get this, right? Because they just don't understand the tech, to your point. But it's very akin to what they've done with their shares, right? They don't continually just add new supply.
Yeah, unit bias is actually very similar to the fallacy that stock splits are good for stocks.
Yeah.
When you do a share split with a company,
nothing's changed.
You double the. Yeah, nothing has changed. The company isn't more profitable. It isn't a better company, but it sometimes does increase the price a little bit, and that really can be attributed to the fact that humans are irrational and we have this unit bias. Humans are irrational about a lot of things, but we can confront our irrationalities and recognize that we're not behaving in the most intelligent manner and fix that. And like with eating, for instance, you can see a plate of food and think, okay, I don't have to finish this entire plate of food. I can eat half of it because it would be bad for me to finish the entire thing. So the same thing is true with unit bias. I think people just need to wrap their head around the fact that it's completely irrational to buy a different altcoin just because the unit price is lower.
It doesn't matter. Same thing with the stocks. People will look at me like, well, this stock's cheaper. And it's like, look at the earnings, look at the business. It's like, this is crazy, but this is how people are buying stocks on Robinhood now. Like kids that probably shouldn't be investing because they don't know anything about investing. They're just basing it purely on everything's going up. I mean, everybody's a genius in a bull market, right? But let's take a step back. So that I used Berkshire Hathaway for the unit bias issue, but for the volatility, you could look at Amazon, right? So I think Scaramucci kind of is the one that brought this up on my show, and I thought it was a great point. He said that Warren Buffett said Bitcoin's too good to be true, and he looks at the camera and he goes, Warren, you're too good to be true. It's a great point, right? It's like when you saw the growth. He goes, but if you look at Amazon as an example, right? If you would have bought the IPO, I think it was in 1997, if you put like $10,000 in today, you'd be a multimillionaire, right? But along the way, there's massive volatility. So people say you can't have a store of value if the price of Bitcoin is going up and down so much, right? So how would you dispel that for those that look at the volatility as a risk?
Yeah, I think it's actually a little bit different to Amazon because the volatility really had to do with people's perception of future cash flow. Whereas Bitcoin doesn't have cash flows. Yeah. So the question is this volatility inherent or not? But what I get back to is this evolution of money. And Bitcoin is slowly transitioning to becoming a store of value. And what that means is people are adopting it for that purpose. But as Bitcoin becomes larger and it becomes established as a store of value, its volatility will go down. So if you go back in history to 2012, the Winklevoss twins, who were involved in the founding of Facebook, they put $10 million into Bitcoin, and that dramatically moved the price up because Bitcoin was a much smaller asset at the time. It was much earlier in the process of monetization. But if you fast forward today, if someone put $10 million into Bitcoin, it wouldn't budge the price at all. You wouldn't shift the price even 1%.
Maybe in a millisecond, but then it would go away.
Yeah, exactly. But Bitcoin still does have some volatility because the size of capital coming in and recognizing that it's a store of value is also much larger. Mm-hmm. So you have billionaires and corporations coming in, putting $1 billion into Bitcoin. And so it does still have some volatility. But as Bitcoin gets to the capitalization of gold, which I believe it will in this next decade, its volatility is going to drop significantly. Then you'll have billionaires coming in and putting, say, $100 million of their savings into Bitcoin, mm-hmm. and it won't budge the price. Yeah. So Bitcoin's volatility is really a function of its nascency, how new it is. As it develops more as a store of value and as its capitalization goes up, its volatility is going to drop significantly.
Another criticism is what happens when the mining goes away, the subsidy. In the future, the cost will be too expensive because the transaction fees are going to be too high. So we know that that's not the case, but why is that? How are we going to fix that?
Yes, so miners validate transactions on the Bitcoin network, and they're compensated in two ways. One is the block subsidy, which is kind of an inflationary subsidy that's the cost of which is borne by all holders of Bitcoin, because it's creating more Bitcoins, which in a way kind of inflates away the value. But that subsidy is decreasing over time, and eventually it's going to go to zero, mm-hmm. which is what makes Bitcoin unique. But the other component of the compensation to miners is transaction fees. And what's going to happen is that as the block subsidy goes away and the inflation in the Bitcoin economy goes away, miners are going to need to be compensated with transaction fees. And you can actually already see growth in the transaction fee market, certainly much more than it was, say, 5 or 6 years ago. And the other thing I would say about transaction fees is that people's expectation about Bitcoin confirmations when they send Bitcoins, and they're looking for a certain number of confirmations before they trust a transaction has finality. I'm getting a little bit technical here. All that means is that the number of confirmations that people will need will go up. Currently, if you send Bitcoins, a lot of exchanges when you send Bitcoins to an exchange, they'll say, we will credit you when you have 6 confirmations on the blockchain. That means your transaction was confirmed in 6 blocks. What's going to happen in the future is that people are going to say, well, we might need a few more blocks than that to feel really confident that this can't be unwound.
I think when the transaction fees go up and the subsidies obviously are going down and potentially get disappear over time, that's when you have the second layer to kind of solve for the increased cost for the transaction, right? Because they kind of batch it together, I guess.
Yeah. People were really confused about what Bitcoin was in the early days, and they thought this is a payment system.
It's probably because of the way he titled the white paper. Right.
Yeah. People were really confused about the word cash,
Yeah.
but really cash means a bearer instrument. Cash means something that's valuable in and of itself. It doesn't necessarily really mean payments. That gold is a form of cash,
Mm-hmm.
because it's valuable in and of itself. That's opposed to, a bond or something which is valuable only because the company says it's valuable. And Bitcoin is that same kind of thing. It's a bearer instrument. But really what Bitcoin is a network for large scale settlement between financial institutions. It's the equivalent of gold, as gold when gold was money in the 19th century. And what that means is that it's the thing that banks and governments use to settle with each other when they have a debt with the other person. The debt is extinguished by paying in gold. So Bitcoin isn't really at its base layer isn't really suitable as a payment system to
No.
go and buy coffee or bread in the future. It's going to be used between financial institutions to settle debts. But just as you say, there are higher level systems that are built on top of Bitcoin that do allow for that transactional usage so that you could go to the grocery store and buy a loaf of bread.
I got to tell you, BJ, I have really, really smart friends in tech, and they keep going back to this point to say that this is why Bitcoin will fail and something will replace it. This is the technical argument, not understanding that there's a monetary argument for this, right? And that there's a monetary value versus the technical value. And that the second layer, and they say, well, the problems with the second layer is you're saying that you want complete freedom within this, from centralization, but there's a potential centralization issue then because you're now relying on a third party, right? And at that point, there's potential censorship and stuff like that, tainted coins, et cetera, like all this kind of stuff. So what do you say to that?
Yeah, people in Silicon Valley, in my experience, at least when I was at Google, they don't understand money. Most of them have an entrepreneurial or an engineering mindset, and they think about optimizing things.
Mm-hmm.
They don't think about what is the social value of something like gold. Most of them don't. If you ask the average engineer at Google why gold is valuable, they wouldn't understand because they would say it's a useless rock, it doesn't do anything. But gold provides this massive social utility because it allows us in society to coordinate with each other, or at least historically it did. So, Bitcoin, there is a trade-off with digital currencies, and Satoshi Nakamoto's breakthrough was to create a system that was decentralized and where you could trust the monetary policy and the inflation schedule. But to make it faster, there's a trade-off with the decentralization. If you made Bitcoin be able to handle a lot more transactions, then it would lose that decentralization.
Mm-hmm.
And Satoshi Nakamoto erred on the side of more decentralization and more credibility of monetary policy because that was what was really valuable. If you want to do that kind of transactional stuff, you'll do it on a different level of the financial network. And actually, all financial systems are built in multiple layers. Like the base layer of our current financial system is dollars. But then you have layers built on top of that. Like banks settle with dollars using reserves at the Federal Reserve. Whereas the payment layer is handled by credit cards like Visa and companies like PayPal, for instance. So even our current financial system is built in layers. And the same thing will be true of Bitcoin. The base layer will be for settlement, and the higher layers will be for transactional usage.
Let me ask you this, though, because I have a lot of these same friends that you have in the Valley, right? And they'll say, well, there's this other coin, right? And I'm sure they have an early pre-mine of it, right? Let's be honest. But they'll say that there's this other coin, and I'm telling you, man, like this is going to solve this problem. Is that enough? If somebody were to figure this out, solve it, actually make it truly decentralized? My argument is no, because you got to get the network effect. So regardless of any of these arguments, without the network effect, good luck. You'd have to have this slow growth. And at the same time, you'd have to have a deceleration of growth in Bitcoin while you're trying to grow into it to be able to replace it. I don't see how you have both of those things happening on top of them trying to figure out the inherent maybe flaw, we can say, in Bitcoin, right? Which is, potentially transaction fees are too high and that there's, whatever. What do you think? Like, do you think that's a possibility that somebody else could come along and solve that from a technical perspective? And then the whole world says, oh, I get it. Maybe we should just buy that instead.
Yeah, I think this goes back to the sort of engineering mindset and the confusion that comes from this. And I think people in Silicon Valley tend to think that these different altcoins and Bitcoin are competing on their technological attributes, which is completely mistaken.
Yeah.
They're competing on their monetary attributes. And Bitcoin is head and shoulders above its competition because it has credibility in those monetary attributes. It's not just that it has them, it has credibility. You can't say that Bitcoin is scarce unless you actually believe it's scarce. Uh, so you can say, well, we did this with some new cool technology, or we've enabled something that Bitcoin doesn't have, or block times are shorter than Bitcoin. Like Litecoin has, I think, 2-minute block times, but it's missing all the monetary attributes that make Bitcoin special, and they're all competing on those, not on like whatever whiz bang feature that they've added. But it's very hard for someone in Silicon Valley to get around that because they're always thinking about my product can win if I put in a new whiz bang feature that the competition doesn't have.
Okay, I'm hearing it in my ear right now. One of my Valley friends telling me just a few days ago, forget all that. Here's the new one, right? Forget all that. But the energy issues, we're going to energy fund now, right? But the governments are going to ban it. They're going to make it go away because they're, and the corporations are going to not want to, deal with, Bitcoin. They're not going to want to accept payment in Bitcoin and all this kind of stuff. And it's all about the energy costs and the mining costs. And this other coin, it's more efficient. Again, it really goes back to the network. So even if you do find something that's more energy efficient, it comes back to the qualities of a good money relative to these issues, right?
Yeah, actually, I think the energy issue is probably one of the biggest misunderstandings of Bitcoin. I think Bitcoin has is such a strong force for good in the development of renewable technologies. That's what people don't understand.
Yeah.
In places where it would otherwise be uneconomic to develop renewable energies, Bitcoin provides the incentive to develop them. Because you may not have anyone living in a particular area, but you may have a renewable source that no one wants to touch because they say, well, there's no one living here yet, so why would we develop it? You can send Bitcoin miners to an area like that. They can mine, and then they can transmit the Bitcoins around the world over the internet. So Bitcoin almost provides a battery that allows you to store energy in a digital form in from places where there's a lot of renewable energy. Because when you think about renewable energy, energy itself is not easily transmissible.
Yeah.
It actually, you can't transmit it very fast. So if you have a big energy source like geothermal energy in Iceland, you can't take that energy and then send it to Texas.
No. And you can't store it in batteries. It loses I forget what percentage a day or whatever. It loses a year. I forget.
Yeah, you lose a significant amount of energy over time. So Bitcoin is a great way to take that excess energy and do something useful with it, which is to provide a new form of money, which then allows for greater social coordination and greater global trade.
Yep.
So Bitcoin actually is great for renewable energy. That's the biggest message I would like to tell people who criticize Bitcoin for its energy consumption. You need to look at what the actual energy consumption is, where it's coming from, what is it incentivizing. Like Bitcoin miners usually go to places where there's an excess capacity in energy because it's either been overbuilt or it's in a place where there's a lot of renewable energy like Iceland. There's an example of Sichuan province in China where they massively overbuilt hydroelectric dams and they had way more energy than the people in the area could use. And that energy wasn't going to do anything. Like I said, you can't transport it somewhere else. So it was just being wasted. Mm-hmm. And those are the kind of places that Bitcoin miners gravitate towards, where there's excess energy that can be consumed.
I actually brought this up to a buddy of mine, and he said, well, the problem with that is it creates centralization issues at that point. And I was like, why is that? He's like, because if you go to these areas that have the dams, or he gave two arguments on the energy thing. He said, if you find that there's areas in the world, right, where it's efficient and cheaper to then mine the Bitcoin because the energy costs are very, very cheap as a result, like you're talking about, becomes a centralization of that particular country, now has potential, like, there could be a state attack of some sort. And then he also says, but if there's a cheaper energy, right, like coal in China or something, that's also an issue for the environment and stuff, because the miners are going to go wherever it's most profitable, right? Which, again, state attack, they could try to, which we know with the China thing, that's gone now, right? They banned it, which is crazy that they did that, by the way, because that was a potential risk, I guess. But that was I don't know what the percentage probabilistic outcome of that would have been, but it was there, and they've kind of dispersed all the miners now because they kicked them out. But to your point, to my point that I'm trying to make, actually, if there are renewable sources that are in certain regions, there becomes a centralization of the miners in those regions. Is that a risk, I guess?
Yeah, we did actually see that with China where they there was a lot of Bitcoin's mining capacity was in China, and some people did worry that, the Chinese state could attack Bitcoin. And that happened. The Chinese state outright banned Bitcoin. What we learned is the resilience of the network. Miners just moved. They took their hardware and they moved to various places around the world. They
What if they
moved to Texas.
nationalized it, though? If they came in and tried to take it over at that time, and rather than kicking them out, they just try to come all at the same time, all the locations, and do a 51% attack. That was a potential risk.
Yeah, I actually talk about this in my book because it is an unlikely it's an unlikely eventuality, but Bitcoin does have what I would call a nuclear option, which is that miners operate this function. It's called SHA-256, and a lot of capital expenditure has gone into developing hardware that is very, very optimized for this single purpose. Now, it is possible that the mining function in the Bitcoin network has changed. It would be quite difficult because you'd have to get consensus of the entire network and everyone would have to jump on board. But if Bitcoin was being attacked, I think you could get consensus on that. And what that would mean if you changed the mining function is that anyone running the old mining hardware, that hardware would instantly become worthless because it wouldn't be optimized or work on the new mining function. So you could have a network, it's kind of the immune system of the network, recognize an attack is happening by the Chinese state, which has nationalized the mining hardware and trying to do a 51% attack, and then just flip the mining function, and then tens of billions of dollars of value is being wiped out that China owns. So an attacker would be aware that there is a risk to them as well. They can attack the network, but then the network can shift itself to protect itself. So that's why I think it's quite unlikely that anyone would attempt to do this, because it's incredibly expensive and there's a risk that the network would pull the nuclear option on you and you'd lose the value of all of that hardware instantly.
I want to go over the risks. You talk about this in the book. I think it's great. Protocol risk is one. State attack, we just talked about. Minor centralization, I think we've kind of talked about. Custodial risk, we can probably talk about that one. So why don't we go to protocol risk, custodial risk. We'll do the rehypothication, get that word out. And then the one that I think is the true risk actually is like the Volcker type of risk. I've always said interest rates skyrocketing in the middle of the night on a Saturday, right? The Fed just changes monetary policy and decides it's in the country's best economic interest to put us through a lot of pain because this is going to really be a threat to our currency, which is a threat to our democracy and everything else. So before we get to that, tell me about the protocol risk and the custodial risk.
So Bitcoin is a software protocol. It's a protocol for value transfer across the internet. And when Satoshi Nakamoto came up with his groundbreaking white paper, there was a lot of skepticism that he had actually solved the problem, the Byzantine generals problem that made Bitcoin possible. And I think in the earliest years, that a lot of people tried to break the protocol and find flaws in it. That's a risk which still exists, but I think it's diminished significantly because it's been a decade of some of the world's smartest computer scientists and cryptographers trying to break Bitcoin. So I think there's fairly high level of confidence that Bitcoin's protocol is rock solid, but it's a tail risk because it's a software protocol, and perhaps at some point in the future someone will find a catastrophic bug in it. I think it's incredibly unlikely at this stage that's true.
How do you, by the way, how do you mitigate that risk? Because if that's at risk and you wake up one day, it happens at 2:00 in the morning and you're sleeping, you're like, oh my God, right? It's going to be just selling is going to be off the charts, right? You would see a massive crash. There'd be a fork though. They'd fix it. As Jimmy Song tells me, we would fix it, we would fork it, and it would all be as if it didn't happen. That does not mean, by the way, that your underlying asset, you still have one Bitcoin if you had one Bitcoin, right? It doesn't mean that the price is not going to go from a liquidity crisis, just drop in the short term, right?
Yeah, I think the way you mitigate it first is that you make it an open source protocol. Like anyone can inspect the code, and people do inspect the code, and they want to try and understand if it has flaws. And there are people who are devoted to doing just that. And the other response is exactly what you said. Because it's a software protocol, it can be fixed if there's a bug. I mean, just like if there was a bug in Microsoft Windows, you can create an update. And if it was a catastrophic bug, they would come up with an update very quickly. the hard part isn't so much fixing the software. The hard part is getting consensus from everyone in the network to upgrade to the fix. And if there was a catastrophic bug, getting consensus is actually a lot easier because participants in the network say, well, if I don't upgrade this, then I could lose my savings. So I think
There's an
protocol
incentive.
risk is there's an incentive to fix it if there was a problem.
Okay. Custodial risk?
Yeah, custodial risk is the idea that there are these large custodians like Coinbase, which hold a fairly significant fraction of the supply of Bitcoin, and have actually become the holders of Bitcoins for some of the biggest financial institutions. Uh, the risk here is that one of these custodians, which holds a significant amount of Bitcoin, gets hacked,
Yeah.
and then
Mt.
people
Gox. Yeah.
lose confidence in Bitcoin because of a failure at a particular institution. Now, the real solution to this is to have more decentralization of custodianship and to encourage people to own their own or hold their own Bitcoins, including companies. Because the power of Bitcoin is that you can hold your own savings at very little cost. It's just that people are still afraid of the power of doing that because you can shoot yourself in the foot. You're managing your own private keys when you own or hold your own Bitcoin, and if you lose those private keys, the Bitcoins are gone from the world. It's kind of the equivalent of if you had a car and you lost the car keys, the car vanishing from the universe and you never being able to get it back. So owning Bitcoin does feel a little bit scary, but I think over time, technology will develop to make it easier for people to own Bitcoin directly and to not feel as scary as it does today.
The risk of rehypothecation, which is interesting. A friend of mine is Jason. Him and Pomp are investors in like BlockFi and stuff, and all these guys are putting these layers out there so that you can pledge your coins and you get an interest rate on it. But I think in your book, as you described it, because I didn't even know what rehypothecation was a couple of years ago, right? So I started to learn because I got into Bitcoin and was learning more and more about Bitcoin over the last few years. And that's when I really started to learn about it. So why don't you tell us what is rehypothecation and how is that a potential risk to Bitcoin?
Rehypothecation is really just the relending of Bitcoin as collateral.
Mm-hmm.
And how is Bitcoin used as collateral? You give your Bitcoin to a financial institution like BlockFi, for instance, and they either give you interest or they give you a discount on using their products or services. And when you post collateral, you can do things like short. You can short Bitcoin or you can short some other thing. And if your bet is wrong, they take your collateral. That's the idea of why you'd use collateral. It
It's like
allows
buying stocks on margin or something, right?
exactly right. It allows you access to financial products that you would otherwise not be able to do or use. And it gives the financial institution the ability to take back some value if your bet was incorrect. But the real problem occurs when the financial institution says, well, now I have your collateral. I'm going to try and make money on your collateral. And the way I'm going to make money on your collateral is I'm going to lend it out myself. I'm going to lend it to another financial institution, which says, well, we need to borrow some Bitcoin because we are offering products that require some Bitcoin. So we need some Bitcoin right now. We're willing to pay some interest. And what happens with collateral is that it can be relent over and over and over again by financial institutions, where BlockFi lends to Coinbase, and then Coinbase lends to Binance, and Binance lends to someone else. And the end consequence of this is that if you get a bad investment or bad allocation of capital at one of these financial institutions, it can cause a liquidity crisis where everyone in the market tries to get their Bitcoin back at once because they need to cover a loss from a bad investment. And then what these institutions end up doing is that they start selling their collateral because they see bets going wrong
Mm-hmm.
and they want to cover themselves. And the way they cover themselves is to sell their collateral to cover the loss. And when you have a whole bunch of financial institutions selling collateral at once, it can dramatically drop the price in a very, very short period of time.
NGD technology.
Yeah, exactly. And you get a liquidity crisis.
Yeah.
This is actually what happened in the 2008 financial crisis, where the collateral that was used were mortgage bonds, and they had been lent out over and over again in the financial system. And then when one bank saw a loss at another bank, like at Lehman, they thought, well, the collateral I have may not be worth as much as I think it is, so I better sell it now to cover potential future losses, which drove the price of mortgage bonds down, which triggered other financial institutions to question the collateral they had and then to sell. And so the price went down, precipitously in a very short amount of time, and ended up causing massive losses across a lot of banks, many of which failed because of this. So the scary thing about rehypothecation is that in the Bitcoin market, you could have a liquidity crisis where Bitcoin drops very quickly, and then a lot of these financial institutions fail because they didn't allocate their capital correctly.
This makes me think of what a lot of people talk about. I'm on Clubhouse a bunch, and I talk to these guys on Clubhouse about Bitcoin and Twitter Spaces and stuff. By the way, you should go on there. I'd love to have you on there. But they say buy, borrow, die, right? This is the whole thing that everybody said. Never sell your Bitcoin. I think it comes from Michael Saylor because he had this one interview where he was just like, never sell it. Borrow against your house. Borrow against that. Just buy more Bitcoin. He's very radical about it. But like, where do you shake out on this? Because I don't, over time, if you're all in on Bitcoin, you'll either have to sell some of your Bitcoin, right? And now they're talking about a wealth tax, right? So I don't know. Like, what do you do? Like, if they're going to do it, like you said, if they can't do inflation, if they lose and it becomes a hyper-Bitcoinization, we should get to that in a second. But if that ever happens and you have hyper-Bitcoinization, I guess at some point you'd have to borrow against it, or you're forcing me to sell it to pay a tax on the value of it. I mean, this is crazy talk that we're having, but this is the world where we're living. They create the inflation, they create the problems, and then they blame the money for but it's really not us. So buy, borrow, die. That then goes back to rehypothecation, right? Because you're now forced into this system of risk, right? They're forcing you back into risk. Thanks, government, once again, right? So what do you shake out on buy, borrow, die?
So the strategy of buy, borrow, die is actually something that's used by a lot of very wealthy people in the United States. And there's a very good reason. The tax system incentivizes it. What you're doing is, especially if you have an asset that's going up in value quickly, you borrow against it for your spending needs. So you get dollars that you can use to spend, and then you have to pay back the loan, right? But because you still have the asset which is going up in value, the amount of the asset that you need to sell to pay back that loan goes down over time. So you have 10 Bitcoins, you borrow that much of dollars so you can spend, you buy a car, a house, whatever you do. But because the value of the Bitcoin is going up and the loan is denominated in dollars, the amount of the Bitcoins that you have to sell, you might only need to sell one of those Bitcoins to pay back the loan that you took against all 10 Bitcoins because the value has gone up so much. The benefit of doing this is that at the end, when you die, there's this step up in basis, which is in the US tax code, which means that when you give your assets to your heirs, they don't have the basis of when you bought it, they have the basis of the value of the asset at the time, which means that if they sold your asset at the time they got it or inherited it, they would owe zero tax. And so this is a way of kind of generating income from a valuable asset and never having to pay tax on it.
They're already talking about it. They're probably going to eliminate stepped up basis over time, at least for certain net worths and all that stuff, right?
Yeah, it's an open question whether you could think of it as a loophole, but they weren't able to get rid of it, this last go around. They really tried very hard, but perhaps if there was...
Well, in the future, let's say we got to hyper-Bitcoinization and they can no longer tax us through inflation, they'll have to forcibly tax us. And they'll probably, one way to do it is when people die, right? They'll be able to get a lot more of the taxes that way.
Well, they already kind of do. There's the estate tax over a certain amount. I think it'll be hard to... Taxation's not going away. I should say that. Taxation will always exist, and they'll find a way to tax even in a Bitcoin world. I just think that governments will have to shrink commensurate to the pain of only getting funding through taxation. Governments get a lot of their funding through inflation right now, but if you have to directly tax people, people are going to be much more reluctant to pay up as much as governments are receiving right now. All
right, so I'm the government. I'm so pissed off. I can't inflate you anymore. The tax thing's not working because I'm going to get voted out. How the hell am I going to fix this, right? This is a real risk to us. Okay, that's it. We're just going to ban it. So tell me why they can't ban it.
I think it comes down to a couple of things. Firstly, Bitcoin's decentralization. It kind of exists on tens of thousands of computers around the internet. There's no central point of failure where you can just go to a company and say, turn this off. Bitcoin can't just be turned off. If you had a concerted nation state attack where they tried to make it illegal to own or make it illegal to trade, that could definitely slow its monetization down. But what I view this as is a race to see whether Bitcoin gets enough adoption that political attacks on Bitcoin become infeasible.
Mm-hmm.
And the example I like to give of this is the ride sharing company Uber. Uber had this strategy where they would go into a city without any permission and launch their service, and they would compete with the taxis in the city and completely destroy the taxi industry because Uber is so much superior to taxis. Um, and taxis had a lobby. They had a very strong lobby in a lot of cities, and they would go to the local city government and say, well, you need to shut this down or regulate this because they're destroying us and this is not fair. They've got a better product and this is unfair competition. But that didn't work because Uber would, in that time, get enough of a user base and enough people using Uber for employment that they had a very strong natural lobby. So when a local government finally got around to it and said, okay, we're going to regulate you, all of these people in the city who loved Uber for either because
back.
they earned money or they were using, they would push back. And the same thing is true with Bitcoin. The more adoption it gets, the more political sway Bitcoin kind of as an entity will have. And you're already seeing this. There are members of Congress. There's a US senator who's very actually a number of US senators who are very pro Bitcoin, a lot of Congress people who are also pro Bitcoin. I think it's an open question though, whether the entrenched interests like the banking industry and the Federal Reserve will come to see Bitcoin as enough of a threat that it's worth attacking it, really attacking it to try and shut it down before there's enough people who own Bitcoin that it's just not possible. It would be like, I think 5 years from now when Bitcoin has enough adoption, I think shutting it down would be the equivalent of shutting down 401ks. Uh, you'd have a revolution on the street
Yeah.
if people's savings were confiscated in that way. So I think I would say it's a valid issue to be concerned, but I'm cautiously optimistic that this.
And it's sort of shaken out. Like I'm friends with CJ Wilson, who's on my show as well. He's into Bitcoin and was a retired baseball player. And he's a part of a lobbyist group now that was formed. There's several people that formed it that came from Clubhouse, actually, a bunch of Bitcoiners on Clubhouse. And they formed a lobbyist group. And he was in DC earlier this week and meeting with like Newt Gingrich. And they got Ted Cruz, the orange pill Ted Cruz and stuff. So it's pretty interesting. And I think it's kind of important in the short term. In the longer term, it doesn't even matter. To your point, it goes back to network effects, right? Once you hit a certain critical mass, that stuff is noise. It doesn't matter because they know the constituency that's vote for them, those Congress people and senators, they're going to know, I can't go against this because I'm not getting back in, right? They're going to vote me out if I do that. But we're not quite there yet with that adoption. So I think these lobbyist groups at this point are kind of important for a potential state attack of some sort. That brings me to the last point, which is Federal Reserve interest rates. Paul Volcker in 1980, I think it was, right? In the middle of the night says, we're just going to jack the interest rates about 20%. Holy cow. I mean, I say this and I'm friends with Bitcoin Tina and private call start yelling at me. They can't do that. And I'm like, I love Tina. And I'm like, dude, they could do anything, right? You'd be surprised at the stupid things the governments can do. You and I think that that's crazy and I'm sure, but that is a risk, right? That's the only risk, in my opinion, that is a valid risk. Because at the moment, and by the way, it doesn't kill Bitcoin. It will kill the price. There'll be a liquidity crisis like you haven't seen, because it becomes an alternative, right? And I think a lot of the money, the Michael Saylors of the world, they're in it because of inflation, right? He's openly said that that's what made him really open his eyes to Bitcoin. So that's a real risk in my opinion. I'm guessing it's probably a potential risk in your opinion. How do you weigh that risk? And what do you tell people what you think on that?
It's definitely a real risk. And as Bitcoin becomes more of a macro asset, where as it reaches the same scale as gold, it is susceptible to interest rate policy changes, definitely. So I agree with you there. in the earliest days, probably Bitcoin wasn't very susceptible to monetary policy because it was kind of like a startup,
Yeah,
and
nobody's paying attention.
the market capitalization was so small that people coming in was really what dictated the price movements. But yeah, now I think macro factors like interest rate policies could affect Bitcoin. The big difference between today and when Volcker was running the Federal Reserve is the government's debt position.
Mm-hmm.
The government in the early 80s only had debt at around 40% of GDP, whereas debt levels now are over 100% of GDP. So if the Federal Reserve were to increase interest rates the same amount as Volcker did, the national debt would not be serviceable. The US would have to default on its debt, and that's not going to happen. So they are constrained by fiscal factors. And those fiscal factors is the amount of debt that's been accumulated by the federal government. So that is one difference I think between today and the past, and why I think it's much less likely that we're going to have a very large spike in interest rates. I will say, however, though, with monetary goods like gold and with Bitcoin that don't produce cash flow, they do the best when real interest rates are negative, which means that you are punished for holding cash. And you are currently punished very heavily for holding dollars.
Yeah. You just don't see it because you see the same account balance, but you're being debased like crazy.
Exactly. You have $10,000 in your bank account. Next year, your $10,000 can only purchase $9,400 worth of stuff. So you've really been harmed. So that's a negative interest rate environment, and that's really great for monetary goods. A positive interest rate environment, a real interest rate is usually bad for monetary goods like gold, and that's like the period of the 80s and 90s. You had a very strong positive interest rate because in an environment of a very strong positive interest rate, you can earn a real yield on dollars just holding them in the bank doing nothing. And so that draws savings out of things like gold, because if you own gold, you think, why this, it's not producing any cash flow, it's not producing any real interest. I'll move my savings to dollars, which are producing a real return. So the purchasing power of dollar in a bank is going up over time. Um, I'm very skeptical, even though I grant that this is a real risk. I'm very skeptical the Federal Reserve is in a position that they can get us to real positive interest rates.
You mentioned this in the book, which is there true independence even, right? Like that, the question is, are they truly independent anymore?
The Fed, yeah, I mean, independent from whom? Sorry, I'm not sure I understand.
Political pressures, like Trump, for instance, when he was in office, right, saying the things that he said, and I think it had an influence over Jay Powell, right, and some of the policies and some of the things he did. So, is there true independence these days? Can they just do what they think is in the best interest of the country and the money supply and/or the dollar, or are they doing things that are politically motivated in some way?
I mean, I think they're always politically motivated. Anyone in office is somewhat politically motivated, but I think the bigger risk for the Federal Reserve is their credibility. There was a time in the 80s and 80s, 90s, and early 2000s when the Federal Reserve had a lot of credibility. When Greenspan was running it, and for a while when Bernanke was running the Fed. And credibility is very, very important to a central bank because they're trying to change people's expectations about inflation through their announcements. And when they lose credibility, when a central bank loses credibility, those are the moments when economic systems can collapse, because people can lose faith in the system immediately and just decide to abandon it. And this is usually what happens in a hyperinflation, when the central bank completely loses its credibility. So I think the 2008 financial crisis was a major blow to the credibility of the Federal Reserve, and it's never regained that credibility. And I think we now live in a world where we have an easy alternative for our savings. There is an escape hatch. Whereas in 2008, when the financial crisis occurred, there wasn't really a good escape hatch. I guess you could buy gold, but gold is so inconvenient to own, and it's very hard to verify that you actually own it. If you own like an ETF, like, do you actually own the underlying gold or do you not? Is it where is the gold? So we live in a very different world now, and I think the fact that they're losing their credibility could spiral out of control much more quickly.
Peter Schiff was on Pomp's show the other day. I was watching him down in Miami. I was watching him, and It was a pretty good show. Generally, I think Peter's a smart guy. Like, I don't mean any offense when I'm about to tell you, but I put a tweet out there the other day, and I said, I'll read it to you. I watched Pomp's show with Peter McCormick and Peter Schiff today, and I have to say, Schiff is either an idiot or he's lying on his views on Bitcoin. Because he's like saying that, Bitcoin's going to zero someday. You guys are in a Ponzi scheme, like this craziness, right? And then he tweeted back at me, says, maybe I'm just correct and you're the idiot. Am I the idiot? And that's the first question. And then, most people like a Peter Schiff or gold bugs or older folks, they'll say, I could just buy Bitcoin. I could buy gold. Why do I got to buy Bitcoin? And if the question is, and I'm looking at your chart, and I'll put it up there for everybody, but looking at the chart, right? In your book, and where you grade everything, and we give them a D on portability. No question. I can't have like $1 million in gold sitting in my pocket. It's not going to work, right? So like, how am I crossing borders with it and all that kind of stuff? But with Bitcoin, you can. And so for people in the Western world, they don't understand why that's important, right? In Venezuela and other places, they're keenly aware of this. Nigeria, right? But people here, they're spoiled. They don't understand that. So for those that don't understand it, let's not even try to get them to understand it. Just take the portability argument out of it. Why not just own gold? Why do you have to own Bitcoin? Because it seems like Peter Schiff, he's sitting with like the brightest minds and thought leaders in Bitcoin, and he just can't seem to be orange pilled. Like, what's going on there? Do you think he just owns it and he's lying? Like,
I think the problem isn't so much that Peter doesn't understand Bitcoin. I think the problem is that he doesn't understand gold. I don't think he understands money. He's so caught up in the physicality of gold that its physical nature is what makes it valuable, which is completely mistaken, or that it has intrinsic value. Actually, gold has very little intrinsic value, and historically had even less value than it does today. I mean, today a tiny amount of gold is used in electronics, but that wasn't true in the 19th century, and gold was actually much more valuable in the 19th century. It was valuable because it served the purposes of money that we've talked about: store of value, medium of exchange, unit of account. Now money is something that's you can describe as an intersubjective reality, and I want to describe what that means. It's an institution that has value only because everyone believes it has value. And there are various different intersubjective realities. Religions are an intersubjective reality. Governments are an intersubjective reality. A government is an actual physical thing. It's just in the imagination of all the people in the United States that there is a government and it's valuable. And because we all believe it, it is, a thing. And money is the same thing. And money, because it's an intersubjective reality, it doesn't need to be a physical thing. It just needs to be a belief system. Mm-hmm. And actually, money is most powerful in its purest form, which is a pure intersubjective reality which doesn't have a physical instantiation. The physicality of gold is actually a huge disadvantage to gold. It's not an advantage. It actually makes it inferior as money because it's harder to transport. It's harder to verify because you actually have to punch it punch a hole in it to figure out whether it's really gold. It's harder to store. It's more costly to store. Its physicality causes problems that make it an ideal intersubjective reality. So Peter Schiff, the real problem is he hasn't understood why gold is valuable. That it's not because it has these uses. He seems to get caught up in like, oh, gold has intrinsic value. Mm-hmm. But most of gold's value comes from its intersubjective reality as money. If you took away that intersubjective reality, the value that comes from it, gold's price would probably be like $50 an ounce or $100 an ounce instead of $1,800 an ounce, because it does have such low utility. And he connects these two things, the excess value that it has for its use as money to its utility for other purposes. And there is no connection.
Yeah.
If anything, the connection is the opposite direction to what he thinks. The more useful something is for other purposes, the less useful it is for money. Because you don't want the value of your money fluctuating a lot because it has some other use. If it was like a super useful commodity and that use value shifted, daily and was volatile because of that, it would become really unsuitable as money. So this is why historically the things that have been chosen as money by human societies have been basically useless. Shells and beads and gold, they're all basically useless. And the more useless they are for these other purposes, the better they are, or the better they can be for money. And Bitcoin is the best of all of these because it really doesn't have any other use, but it is very, very good as money.
Yeah, and like I said, Schiff is either an idiot or he's lying on his views on Bitcoin. He says to me, maybe I'm correct and you're the idiot. He's trolling me. And then I wrote back to him and I said, that goes without saying. But that doesn't change the fact that you're also an idiot. And then I said, you keep saying Bitcoin is not real because it's not a physical item like gold, with the OLD capitalized. Got that from Preston. So is the internet real? Are websites real? Is code real? No response.
Yeah, absolutely. And that gets back to the fact that our government's real. Like
That's right.
governments clearly are real. We act as if they're real. We don't go out on the street and shoot people because we recognize that there is an institution that is real and will do something to us, and there are consequences. And it's the same thing. There are so many intersubjective realities which have power in our lives because everyone else believes in them, and that's totally fine. You can have value without having a physical instantiation.
You've been great. I do want to ask you just a couple more questions as we hop. This one is, have you been surprised, right? Because you talk about some of these things in the book, right? You talk about there's going to be a nation state at some point that adopts it. Here we are, El Salvador, right? Mass mutual institutions, MicroStrategy, Anthony Scaramucci's fund, Ted Cruz we just talked about, right? Have you been surprised by the adoption this year? Because I think some of these things, I talked to American Hodl a bunch and he's like, he's actually surprised. He's like, I didn't see that happening this quick. Has any of this surprised you, the adoption rate of some of the large institutions and not just the money coming in, but the profile of the money coming in?
Definitely the adoption of El Salvador surprised me. I thought that was something that might happen in, a future hype cycle for Bitcoin. Maybe not even the next one, but the one after that. But El Salvador also might be an outlier. It might not be a harbinger of a bunch of nation states adopting Bitcoin in the short term. It's always the case in one of these hype cycles. You get some cohort of people who are way ahead of when you'd expect that they would come into the market, and someone like Michael Saylor, coming in as like the first public company. That's something that you might see a lot more of in the next cycle, but he just happens to be the outlier that appeared in this current cycle. So I was very surprised by El Salvador adopting Bitcoin. There could be other countries which are, own significant amounts of Bitcoin that we don't know about. It would not surprise me at all if North Korea owned Bitcoin. If you are
Wasn't like Bulgaria one of the largest on the Treasury's website too? That surprised me. Probably through confiscation, but
yeah, through confiscation. I don't know if
they're not buying it
actually.
or mining.
Yeah, I'm not sure if they're buying or counting it as their reserves, or they're going to auction it off in the future. But if you are a pariah nation that's sort of cut out from the global financial system, there is no better asset than Bitcoin. I mean, gold is a horrible asset. Venezuela learnt, much to their chagrin, that the gold that they had at the Bank of England wasn't their gold. They tried to repatriate their gold, and the British government said, no, you can't have your gold. Whereas Bitcoin, you can very easily custody it yourself and you can transmit it over the wire. So if you are a dictator, this is somewhat unfortunate, but Bitcoin is money for everyone. If you're a dictator, holding your savings in Bitcoin is much more intelligent than holding your savings in US treasuries or in gold, because you have the power of keeping those savings and being able to send them wherever you want.
You've said that you think that Bitcoin will replace the global financial system in about 20 years. Somebody tweeted today that you said 40. I never heard you say that. Maybe you did, but 20 years. I guess hyper-Bitcoinization is what you're saying is 20. Do you still, based on what we just said with El Salvador and there's what other Latin country was saying that they're looking at doing this too, but regardless, it's starting to happen a little bit faster than we thought. Do you think that hyper-Bitcoinization is going to happen in the next 10, 20, 30, 50? When do you think that'll happen? And what did you mean by replacing the global financial system? Is that what you mean? Hyper-Bitcoinization?
What I said, and this was actually the very last line of my book, was that Bitcoin would become the global monetary base, and that would happen in 50 years.
50 years. Okay.
Uh, so yeah, in 50 years, and that would mean overtaking the dollar and replacing the dollar in that role as that the asset in which nations and corporations want to keep their reserves in. Some people think this might happen much faster than that, but I always say I don't really know what's going to happen in the short term. I get surprised pretty frequently about what's happening in the market, and maybe it goes up, maybe it goes down, but I'm extremely bullish on Bitcoin in the long term. I really do believe that it has the attributes that's going to make it very suitable for a global monetary base. And in the 60s, Charles de Gaulle said that the US had won itself this exorbitant privilege by having the world's reserve currency. I think a lot of countries are going to look at this in the future and say, we don't want the US to have the world's reserve currency. It gives them a lot more power than they should have, and it allows the US to export its inflation to the rest of the world. Uh, so I think nations are going to, especially with the experiment of El Salvador, I think it's going to be a great example for the benefits of adopting Bitcoin. They now have reserves in a currency that can't be controlled by the US, which gives them a lot more freedom and discretion to do what they want rather than being controlled by US monetary policy.
I put a tweet out there like a couple months ago, and it was a play on Amari's law. I said most people overestimate what Bitcoin will do in the short term, and they underestimate what it'll do in the long term. And I think that's what we're basically saying here.
Absolutely, and that's true for a lot of technology. It was true for the internet as well. People get hyped up in the short term, and they think everything's going to happen tomorrow, and then when it doesn't, they get
this is the hype cycle part of the book, right? Yeah,
it's the hype cycle, and then they have despair. But really, in the long term, it will achieve a lot more than people anticipate it does, or that they think today.
If you could summarize in a sentence, why is Bitcoin such an incredible breakthrough in finance and computer science? What is the one thing you would just say, if you could, in a very quick way?
It allows for something that's never been possible before in the history of the world, which is the transmission of value from one end of the world to another end of the world without anyone's permission. That's just never been possible, and that has profound implications for global trade.
Yeah.
So it's a very important breakthrough, and I think it's going to be recognized in the future that it was a foundational change to our monetary system.
And why is today the safest time ever to invest or purchase Bitcoin 2021 versus, say, 2013?
I think most of the risks in the Bitcoin market have been mitigated or have been proven, to not be actual significant risks. I think there was a lot of regulatory risk and uncertainty around Bitcoin in like 2012 and 13. I think almost all of the regulatory risk has gone away. Protocol risk has gone away. The market's much deeper, much more liquid, much more mature. The exchanges are now run by people who are competent. Like if you look at Bitcoin's history and you look at the dominant exchange in 2013 was Mt. Gox. That was run by one of the most incompetent, malfeasant people in the space, Mark Karpeles. There aren't people like him anymore. There's just so much more competence in the ecosystem. And it's taken so much more seriously now.
Basically, the scale has reduced the risk.
Yeah, exactly. It kind of reminds me a little bit about, I don't know if you know this saying about the US Constitution was written by geniuses so that it could be run by idiots. Um, and Bitcoin was kind of, it reminds me of that. Bitcoin was invented by a genius, and in the early days, it was kind of, the ecosystem was run by all these fools, really. I mean, there were a lot of people some of them went to jail, some of them went bankrupt. They were sort of staring at the biggest opportunity of their lives, and they couldn't keep it together.
Speaking of the genius who created it, Satoshi, do you have any sense in your mind that you think Satoshi is a person that we're aware of, or do you think it's an unknown person? Is it one of the names to your mind, like if you probabilistically say more probable that it's so-and-so?
Yeah, there are a handful of people who it could be, who have the background. And it's interesting because if you go back to the time it was invented, there are only a very small handful of people who even understood what he was even talking about. So it could be any one of those people. But then I think it is also plausible that it could be someone else who had been lurking in the background, who was interested in the space and came up with a solution. I think it's better for all of us if we don't that we don't know.
Do you think whoever that is no longer with us?
I think either they're not with us or they've destroyed the keys to the Bitcoins that they mined.
That's for sure, I think. Yeah.
Yeah, I mean, the self-control that a person would have to have, an asset that went from zero to being worth tens of billions of dollars and not having spent a single
One
penny
Satoshi.
of that. Yeah, not one Satoshi that was mined by Satoshi has been spent. So I think the most likely explanation for that is either Satoshi is dead or that Satoshi destroyed the private
And
keys.
clearly has
The
other
amount of
addresses with Bitcoins from the early
self-control.
days. Yeah, I'm sure, right?
Yeah,
He's got
yeah,
some money
yeah,
out of
right.
it. Yeah, I mean, we wouldn't know, but I would assume that that's probably the case, you know?
Yeah, it's unclear. I think we're never going to find out who Satoshi is, and
Yeah,
I think we're going to
I
look
hope.
back at this moment in. Yeah, I hope so too, and I think we'll look back at this moment in history and say that it was the greatest mystery of the 21st century.
I'm going to let you go. I have more questions for you, but what I'd love to do is have you come back on the show in the future because I want to learn more about Vijay himself. I want to ask you the questions. I just really wanted to dive into the book on this show, but there are so many questions I wanted to ask you about you, your life, your origin, yourself, the motivation that makes you, what motivates you and what ticks you and what you're up to these days and all stuff. But I don't want to keep you because I know you got to hop and it's been 2 hours. So is it possible I can have you come back on?
I would love to, Jay. I
Awesome.
had a lot of fun talking to you. I'd love
Okay.
to speak with you again.
Thanks, Vijay. Hey guys, the one and only Vijay Boyapati.